Everybody, welcome back to Ox Talks. Appreciate you watching the show today. Please support the channel and subscribe if you haven't already subscribed. Let's continue to keep getting the word out to people about economic conditions. There are two things happening today that I think are very interesting. One of the top headlines I'm going to cover with you is Dollar General. Their shares are crashing as of recording this video. Their shares are down about 29%. Article came out on the Zero Hedge this morning saying that in pre-market they were down as much as 26%. So the sell-off in Dollar General is accelerating. I'll get into that story in a minute. But what I wanted to bring to your attention is while Dollar General is sliding because the top management there has said that consumers can no longer afford to buy their products, and they're guiding lower. We'll get into the actual data in a second. While that's happening on the one hand, the other hand, you have the broader stock market just rocking and rolling today. I just checked. The Dow's up almost 300 points. Nasdaq's up over 1%, almost 200 points. S&P 500's up. So you have a continued diversion between Main Street and Wall Street. All right. Most people can't afford now to shop at the Dollar General to buy dollar items, which we all know really aren't a dollar anymore. But then you have people, evidently a fair swath of people in this country and around the world that have money to burn to play in the stock market. So continue to watch this, right? Because we have this divergence. We know the middle class is basically non-existent now. It's either lower or it's upper. And so I wanted just to point that out. I'm sure all of you are seeing the same thing, but you would think that something like this terrible news of Dollar General would have some kind of a reverberation, through the stock market. But evidently, bad news is good news. The market's like that because bad news, again, will feed all of the money junkies to believe that the Fed is going to come in here and start cutting rates in earnest. So let me jump into the Dollar General story real quickly. Dollar General shares plummeted as much as 26% as the U.S. cash trading session got underway, marking the steepest intraday decline ever. That was at 26%. Now we're at 29%. Here's the chart that I printed up from Zero Hedge today. Here's where it is right now, okay? It's the steepest decline ever. Even you had to go back to 2000 and looks like 18 to the last time that it was even close in terms of a percentage decline. So the shares of Dollar General are collapsing, crashed to early 2018 levels. As previously mentioned, Dollar General's management noted that core customers feel financially constrained. By examining store locations, we can identify the states where these customers are most pressured. So how many Dollar General stores are there in the United States? There are 18,912 locations in 48 states and 8,000 cities are these Dollar General stores. And looking at this map here on the article, looks like they're primarily on the East Coast of the United States. For the political strategist out there, that this might give some understanding perhaps in swing states where customers are being financially crushed the most by, of course, talks about Bidenomics. Eastern half of the United States. Guys, comment below. Do you have Dollar Generals in your area? I don't believe I've seen any out here. Maybe a couple in Southern California. Shares of Dollar General crashed to hit levels not seen since 2018. Disappointing second quarter earnings report. And here's the deal. They slashed its full year forecast. The retailer warned that its core customers feel financially constrained. All right. EPS came in, earnings per share, $1.70 versus $2.13 year over year. Estimate was $1.79 and missed the estimate by a long shot. Lowered its full year outlook for sales and profit. Okay, so that is a major telltale sign. They do not believe it's going to get any better. And they originally believed same store sales growth was going to be 2%, okay? And it actually now they're saying it's going to be 1%. So they've cut their, let's say, their projections for growth in half. All right. And they see comparable sales also plunging. So we have a situation here where the people in the country, a large swath of people cannot afford to shop at Dollar General. It says, while we believe the softer sales trends are partially attributable to a core customer who feels financially constrained, we know the importance of controlling what we can control. With the evolving retail and consumer landscape in mind, we're taking decisive action to further enhance our value and convenience offerings, as well as the in-store experience for our associates and customers. And they just keep going back to saying how financially constrained consumers are. So let me ask you this: if people are no longer able to shop at the Dollar General, where are they shopping? What's the next level down? I'm not trashing Dollar General. I don't think I've ever even been into a Dollar General, but it's probably like the other dollar stores we see. So, it seems to me that a Walmart is a step up from there. So, and a Target even a step up from there. So where are the people that can't afford to shop at Dollar General shopping? What are they doing? Again, comment below. I'd love to hear from you guys on that. That's I say one of the main headlines we're seeing come out today across the financial media. Dollar General. It's also a story about pending home sales are crashing. The numbers came out horrible. I'll cover that probably on a later video today, and hope to get up a stay out of court episode maybe later on today or this evening after I finish up here at the office. Have several meetings, appointments today. Need to file some papers with the court. So that being said, appreciate all of you. Thanks for subscribing to the channel. Talk to you soon. Bye.